Hi, this is Thomas Cook from Toronto's real estate team at RE/MAX Hallmark, and welcome to Part 2 of our Status of Downtown Toronto's Condo Market Analysis. In Part 1, we ended by discussing why many condo buildings are being constructed in downtown Toronto, as opposed to other areas of the GTA. Let's now look for a few important market highlights and the number of unsold units in the various projects in the GTA. May was the absolute best month ever for high-rise condo sales, with 2,433 units sold, up almost 50% over 1 year ago. It's almost a decade now since government intensification policies started to be put into effect, and they all favor high-rise construction instead of suburban sprawl. And there is a need for these condos other than as an owner-occupied use. Amazingly, even with all the units being completed, and many of them being owned by investors, the vacancy rate in Toronto has actually dropped from 2.7% to 1.6%. This graph goes to the crux of the question: are we overbuilt for condos in Toronto? According to the information we can see on this slide, from 2005 to present, the unsold inventory of suites has ranged from 12,000 to 15,000 units, with the exception of during the economic disaster period between July 2008 and July 2009. Even with the red line on the graph indicating a growth in high-rise suites to 350 all across the Greater Toronto Area, the unsold inventory hasn't really increased, although this doesn't tell the whole story, as we'll see later on. Here we can clearly see that builders are typically selling out just over 2/3 of the suites in their projects before they start construction. By the time the project is completed and occupancy has started to occur, builders typically still have just under 9% of their units unsold. In some cases, this offers an opportunity for a buyer to perhaps negotiate a good price or some other concession from the builder, although often the price paid per square foot at this time is higher than the initial buyers did pay. So if you're buying a unit to live in for yourself, and you have the choice of buying now in the resale market, or buying new construction with occupancy in a couple of years, what are the pluses and minuses of each option? This slide shows in the green area the income required to qualify to buy a resale condo from August 2004 to present, and the blue area shows the same for buying brand new construction. Currently, you need about $68,000 in annual income to buy an average resale condo, but you'd need about $88,000 to buy new construction. By November 2012, those numbers are expected to increase to $73,000 and $96,000 respectively. This decrease in affordability is due to two factors: continued price appreciation in the market and an increase in mortgage interest rates expected over the next few years. Where the red circles are indicates the decrease in affordability due to the reduction in amortization from 35 years to 30 years, which occurred in March of this year. Based on this information, it would make more sense to buy a resale condo now and take advantage of today's better affordability. Now, this slide is very interesting. It shows the number of suites that are expected to be built and occupied through 2014. How does this influence our opinion about the new condo market? Remember, in part 1 of this series, we talked about the fact that over the past 5 years, with all the cranes we've had on the skyline, the maximum number of units the construction industry has ever been able to produce has been just under 15,800. This year alone, there are projected to be almost 19,000 suites completed and occupied. In 2012, that number jumps to an unbelievable 25,301, and then in 2013 falls back to just over 20,700. So, two things can happen. First, buyers hire a lot more construction workers and trades to complete all those units, perhaps with the unintended consequence of them producing a less than perfect product, or a substantial portion of those suites intended for occupancy in 2012 especially get pushed back to 2013 and beyond. I tend to think that a little of both will happen. The result will be that some builders will take shortcuts in their levels of construction finishing, and a wee bit shoddy condo apartment will be the result. Other builders will have no choice but to stretch out their construction schedule, and people who are expecting to move into their suite in 2012 will be forced to wait an extra year or more before getting their keys. So, that concludes part 2 of our Status of Downtown Toronto's condo market analysis. In upcoming parts of this series, we'll be talking about which areas of the city have the best average price per square foot and where future upcoming neighborhoods will be built. Thanks very much for watching this episode of Condo Living Downtown Toronto.tv, and keep coming back for future condo building and market updates.